Hey everyone, welcome back to the channel. Last week, the Federal Reserve made a big move. Jerome Powell announced the first interest rate cut since 2024. But what does it really mean for the economy, for inflation, for jobs, and for your portfolio? In today's video, I'll break down Powell's message, how markets reacted, and what to watch next. Let's get into it. The Fed cut interest rates by 0.25%, bringing the federal funds rate down to a range of 4.0 to 4.25%. Powell framed this as a risk management move, not because the economy is collapsing, but because the labor market is softening, job creation is slowing, and downside risks are rising. At the same time, he made it clear, inflation is still above target, partly driven by tariffs and supply-side pressures. The Fed can't ignore that. And the so-called dot plot? It shows Fed officials expect 2 more cuts this year, but everything is data-dependent. So what's the takeaway? This isn't a massive pivot. The Fed is easing cautiously, signaling more cuts are possible if the economy weakens further. But if inflation stays sticky, they could pause or even hold back. It's all about balancing both sides of the Fed's dual mandate, stable prices and maximum employment. How did markets react? At first, stocks jumped and bond yields dropped. Traders cheered the cut. But as Powell spoke, emphasizing caution, gains faded. Now, investors expect maybe 2 more cuts in 2025, but not a rapid easing cycle. Bottom line, markets are hopeful but volatile. Every new data release could swing sentiment. So where do we go from here? If jobs data weakens, higher unemployment, slower hiring, expect more cuts. If inflation surprises to the upside, expect the Fed to hold back. And if tariffs or supply chain shocks hit, that complicates everything. The Fed is walking a tightrope. Here are the economic reports you need to keep on your radar. Core PCE inflation, the Fed's favorite inflation measure. Jobs data, payrolls, unemployment rate, wage growth. Consumer confidence and spending, households drive the economy. GDP growth and revisions to see how fast the economy is really moving. Tariffs, energy and commodity prices, potential inflation shocks. For the week of September 22, 2025, watch out for Core PCE Price Index. This could make or break Fed confidence. Flash PMI surveys. Early signals of growth and hiring. Revised GDP numbers. Updates to how the economy has really been performing. Consumer confidence data shows how households feel about jobs and inflation. And reports on home sales and durable goods orders, important for demand trends. So here's the big picture. The Fed has started easing, but slowly. Markets are reacting with both hope and caution. And for investors like us, the key is watching inflation and labor data. Those will drive what Powell does next. If you found this breakdown helpful, don't forget to hit that like button, subscribe for more market insights, and drop a comment. Do you think the Fed will cut rates 2 more times this year, or will inflation hold them back? Thanks for watching, and I'll see you in the next video.